1%. Let's take a look at the global macro movers screen to suss out what's going on as they open up live. On the left-hand column here, you see equity indexes. When the tiles are gray, that means there's not really a material move up or down. You can see red is for losses, obviously green is for gains, and now the FTSE moving up to green territory, gaining 1/3 of 1%. The Euro Stoxx 50 benchmark index still unchanged, and the DAX here in Frankfurt is up about 0.4 of 1%. So European markets look to be opening up higher, mildly higher right now. Investors are weighing the impact of the U.S. Republicans' $1 trillion proposed stimulus bill. But here in Europe, we're looking at a lot of data relating to the possibility of a second wave. Spain coming out right now with an unemployment line. Let's check it out on the eco screen. 15.3% is the actual number that came out. So incredibly high unemployment, higher than the previous reading of 14.4%, but not quite as high as the survey. We were looking for 16.5%. Still, the issue is difficult. Obviously, in Spain, in France, in Germany, we see also increased infections that are problematic. Let's get Steve Bryson here to talk a little bit about this with us. He is Standard Chartered Bank's Chief Investment Strategist. And Steve, I guess right now you've got these two main threads in the market. One is the possibility of new stimulus for the U.S. The other is the concern about a second wave here in Europe. What do you think about the latter? What do you think about the economies of Spain, of France, of Germany right now?
Yeah, of course, the situation in Europe, we're used to a second wave coming through in the US, but it's relatively new now in Europe and obviously becoming much more concerning.
Good morning, everybody. Welcome to ESG Live Day Trading channel. You can follow us for free, copy our trades, and make some profit for yourself. Use your own broker. You don't have to sign up with us. If you will subscribe to our channel, it will help our channel to grow. But at the end of the day, it's up to you. We trade our own money, so we're not relying on you at all. What we show you on the screen today, we'll show you 5 pairs of Forex. We'll show you Japanese yen, British pound, Canadian dollar, euro, and Bitcoin. Every time when we place trade, we will place before it will get executed. So you will see before we will buy or sell shares. You will see when it happened. Like I said, we trade live money. It's not demo account, so sometimes we don't have time to chit chat like other maybe schools or academies. I want to just make a point that we're not academy, we're not trading school or college who are trying to teach you. We trade in live money, and this channel devoted to our clients, our customers who invested in us and wanted to see how we trade, where we invest, and maybe they want to learn how to trade as well. So that's why this channel is operational. So if you're not our client or our subscriber, you are welcome to watch our channel. You're welcome. We're offering our strategy, so you're welcome to buy our strategy, but we will not teach you how to trade. We will not try to explain to you where is technical analysis, where is indicators, what's happened. You have to figure out yourself, and especially these days, try to be careful. Don't rely on the people, especially who trade demo accounts and trying to tell you based on charts, 5 or 2 years old charts, that basically, oh, I would buy here or there. We use live charts, so don't rely on companies or people who trying to teach you how to trade, but never even touched real life trades, never had trading account. Okay, so let's start trading. Welcome again.
$150 in about a 5-week period. So gold has continually to push higher, and we're still bullish on a 6 to 12-month view. But at the moment, if you look at RSI, just technicals in general, looking very overstretched. That market diversity indicator also suggesting that we've seen that collapse in market diversity. So it's very difficult to time this exactly. Maybe we'll get a test of a temporary break of 2000 before we see a pullback. But we prefer to be buyers on dips rather than looking for looking to buy today.
We got some lines earlier, Steve, from the European Central Bank. They are asking European banks, the finance industry, to freeze dividends through the end of 2020 into January 2021. What does that mean for your investors? Are we seeing banks continually turned into simple utilities?
I think it wasn't totally unexpected, right? I mean, we've been talking about this for some time, that this was likely to be what would happen. So markets obviously will get some sort of volatility coming through on the back of the confirmation, but ultimately this is a precautionary measure. Obviously, you've been talking about the COVID environment in recent times in terms of the deterioration in the data. And that does lead to risks of increased bad loans. So I think ECB is just taking a cautious stance and saying, let's see how bad this gets before we allow people to go out and pay dividends again. So once things normalize, the dividend yield should be fairly healthy, but obviously we need to get there first.
Steve Bryce, stay with us. He's Standard Chartered Bank Chief Investment Strategist. Now, coming up, we'll speak to the CEO of Delivery Hero after the takeaway giant upped its guidance on revenue for the year. It's one of the darlings in terms of the pandemic. This is Bloomberg. Welcome back to the European Open. We're about 10 minutes into trading this Tuesday morning, and European equities on the front foot. Let's get to the Bloomberg Business Flash now with Laura Wright. Laura?
Thanks, Anne-Marie. Peugeot maker PSA is sticking to its financial outlook. That's after generating a profit for the first half of the year. It suggests the French automaker has weathered the coronavirus pandemic better than feared, and Chief Executive Carlos Tavares sees a sales rebound in the second half of the year.
We will respect this all-weather floor guidance that is an average over 3 years, 2019, 2020, and 2021. So yes, it is an all-weather guidance, and yes, we will stick to it.
The virus is eroding demand for luxury products, and LVMH customers are curbing purchases of high-end goods faster than the company can cut costs. Profit came in worse than expected in the first half. For the 3 months through June, revenue fell 38%. Analysts expect it to be the luxury industry's worst ever quarter. Intel has ousted its chief engineer less than a week after falling further behind in production technology. The company's vast chip design and manufacturing operation will be split and led by other leaders. Intel says the changes are to accelerate production leadership. That's your Bloomberg Business Flash. Anne-Marie, Matt.
Laura, thanks very much. Laura right there with a business flash out of London for us. Now, not all companies are feeling the bite of coronavirus lockdowns in Europe. Delivery Hero has raised its full-year guidance after record growth in the second quarter. The Berlin-based takeaway giant has seen an uptick in orders as people and restaurants look to home delivery while lockdown orders have been enforced. But will the company be able to keep up the momentum as measures ease across Europe? Joining us now to talk about this is Nicholas Osberg. He is the CEO of Delivery Hero, and I guess what we want to know, what everyone wants to know right now as your shares rise this morning is, Nicholas, how sticky is your service?
Well, Arne, so far we see very high stickiness, and both of the previous customers, but also those who came in during the COVID crisis. So right now things are looking good. We had a tough couple of weeks in the beginning of the COVID, but then towards the end of the quarter, growth has been accelerating, and that is still the case. Still optimistic.
Nicholas, it's Emery here in London. Is there a knock-on effect if restaurants go under to your delivery service?
For sure. And we try to do what we can to help the ecosystem, and we have done a lot of initiatives here. We have supported restaurants and merchants in all sort of ways, and it costed us millions and millions. But I think we have gained a lot of trust, and I think we also helped a lot of restaurants to survive this crisis, and I think this will also help us and strengthen our service even more.
I wonder, as we watch you expand all over the world, I think Japan is next on your list here. What other regions have you got your eye on, Nicholas? And which ones have you seen the most growth in so far? So we want to be a global leader in the food delivery space. So we keep our eyes on every market, but at the same time, we have to be humble and realize that we cannot enter too many comparative fields at the same time. So we felt like now maybe the time is there for Japan, and that's why we're going in there. I think overall, general, we saw a very strong growth in the segments of Western Europe, Northern Europe. I think overall, COVID has been also very beneficial for North America and also South America for our sake. While Asia has not been impacted very much by COVID, but overall the growth is of course tremendous there, with over 290% growth year on year, now being the largest of our regions. And then, of course, we have a still very strong business in Southern Europe and Middle East, but here we have seen a significant hit by the COVID, where we had a lot of curfews. Here we have taken a little bit of a hit, but things are now shaping up, and we are exiting those challenges in a good fashion.
Is the strategy, Nicholas, because I know you're going to be closing this deal with your rival in South Korea, is the strategy then to become as big as possible to fend off potential takeover targets?
We want to be the leader in every market where we operate. And as I mentioned before, we want to be a global leader, but we have the size that is necessary now. And we don't have to grow further scale. We have enough scale to make profitability. We have further scale to winning the areas that we want to win when it comes to service, when it comes to product, but also when it comes to brand awareness and likability. So I think right now we don't necessarily do whatever it takes to acquire businesses. We've been a little bit more passive here and rather investing in our own service and own product. But correct, in Korea, we have partnered with Bua Brothers, a very strong food delivery platform, and I think together we'll build an even better service for the Korean market.
I mean, so the Woo-Wah deal, and I just wanted to have the opportunity to say Woo-Wah because it's quite fun, really helps you out in that segment. 56% of total orders came from Asia in the second quarter, and your growth there was 290%. You raised 1.5 billion euros in a convertible bond sale, Niklas. What are you going to use that cash for? I mean, you said it's for organic growth, so I guess you won't be using it to make any more takeovers, but are you building out your logistics? Are you looking to fend off competition through marketing? I mean, how do you use that money?
Yeah, so Asia has become our largest segment. I think if you would have asked me 1 year ago, or investors 1 year ago, they thought that this was a very bold move, what they've done in Asia, where we put a significant amount of money to scale that business. I think now investors start looking at Asia and realize that this starts to become very real. And when you grow with 290% of that scale, it starts to become a big business. In terms of our raise of the 1.5 billion convert, that is mainly to making sure that we have the firepower if need be. Some of it we will invest organically. We will also look at acquisition opportunities when they are the right ones. And then we will also keep some money to making sure that we have the firepower if need be. And we will have some competition coming in.
So you'll use some of it organically, but if you see M&A opportunities, you can use that money for purchases as well, is what you're saying.
We will also look into that, and we constantly done it in the past. We will still do it in the future, but we will be very rational when it comes to economics, and it needs to add something to our business. It needs to add a product component. It needs to add a strong team. It needs to add something more than just size. Size is not really the aim what we're having now. More important that we build a good service, because we will have strong competition from many angles, both players in our industry, but we see the big giants like Google and Amazon and Alibaba. They want to go into every part of tech and use their advantage of having the volume, and I can only expect that will also happen to the food delivery industry. So we want to be ready, and we want to have the size to compete with also with these giants whenever they choose to.
Niklas, it'll be quite a big milestone for you. Will entry to the DAX affect business if you were to replace Wirecard on the index?
Not really. I don't know. Becoming a DAX company is, of course, very honorable, and we feel very honored to be part there. But it's not really a goal. I don't know. We never set the goal that we want to be a DAX company. We set the goal to build the best possible service that we can possibly do it for our customers. And being a DAX company is only a change in index, honorable, but nothing more really. And of course, it's not our choice. It's the choice of investors putting a big value on our shares and the trading volumes that come in. And we're probably close to get there, and let's see.
I'll tell you, it's good for Berlin, Niklas, because if you look at a map of Germany and the DAX 30 company headquarters, they're overwhelmingly in the West. So it's good to have that you pulled one back over here for us. Niklas Östberg is the CEO of Delivery Hero. Thanks so much for joining you. Pleasure speaking with you this morning. Now, coming up on Bloomberg Television, we are going to give you the news on PSA, sticking to its financial outlook despite a profit plunge as a result of the coronavirus. Another CEO we spoke to, the head of Peugeot Citroën. Next, this is Bloomberg.
Welcome back to the European Open. I'm Anne-Marie Horder in the city of London alongside Matt Miller in Berlin. Let's take a look at what's going on in terms of your movers this morning. European banks relatively unchanged. The ECB this morning out with a headline that they're going to ask European banks to forego their dividends for the rest of the year, but a lot of this likely priced in. LVMH under a lot of pressure this morning, down more than 3%. This is likely weighing on the CAC index as well. This comes as they profit at the company missed, although we should say sales slumped 38%, but that still beat the 42% slump that analysts were expecting. Many analysts say this is the worst quarter for luxury. And then Peugeot is up as well, higher this morning. And this comes as they decided to stick to their financial outlook despite the drag we are seeing from the pandemic. I want to bring Steve Bryce back into the conversation. Standard Chartered Bank Chief Investment Strategist still with us. Steve, this morning, autos are really breathing a sigh of relief. Peugeot, they are giving a little bit of an oomph to the auto space. You're quite bullish on airlines and autos at some point. What is that some point? When will they start coming back?
Well, on an absolute basis, obviously, if you look at the auto producers, they have started coming back. They've just been significantly underperforming other areas of the market. So from our perspective, until you sort of see some significant success in controlling COVID, in people projecting that lockdowns are no longer a risk, i.e. we have a vaccine in place that is widely distributed or will be widely distributed in the very near term, then it's difficult really to project outperformance for these sectors. You are seeing in the airline industry some interesting plans going on in China in terms of offering huge discounts or all-in tickets, if you like, so paying for unlimited travel to try and get people back on planes. But the reality is that's only been successful because they've got COVID almost totally under control, and that is, then saying, okay, fine, these cheap offers are worthwhile. Until you get to that situation, I think the sectors are going to be underperforming still for the foreseeable future.
It looks like we can expect LVMH to underperform here. I mean, Anne-Marie is single-handedly upholding the luxury industry. Steve, what do you think about luxury goods? I mean, are they going to see a bounce back? Typically, you don't see, even in these kinds of recessions, really rich people holding back, do you?
There is obviously an element of people that won't change their buying patterns. I mean, obviously, going to retail stores, depending where are you in the world, is sometimes easier than in other countries. But I think one thing that we should also acknowledge is for a lot of these names, travel is really important. So the tourist industry is a significant driver of luxury. And until we start seeing travel between countries, the China travel I was talking about with just within China, until you start seeing cross-border, then I think we're not going to see the growth that we've been used to going forward. And to be honest, that doesn't look, at this stage at least, as if it's going to happen this year. So it's more likely to be a 2021 story.
Steve, thank you so much for joining us, and thanks for sticking with us this morning as well. Steve Bryce, Standard Chartered Bank Chief Investment Strategist, talking to us on this Tuesday. Up next, the ECB asks banks to freeze dividends until next year on a voluntary basis. And in fact, it's really only through the end of this year. But the central bank's watchdog has said it can take legally binding measures if lenders don't comply. We'll discuss next. This is Bloomberg.
Welcome back to the European Open. I'm Anne-Marie Hordern, in for Anna Edwards, alongside Matt Miller in Berlin. We're 30 minutes into the equity trading here in Europe. Stock 600, the benchmark index, is up more than 0.2% this morning. So we are on the front foot in terms of European equities. And if you look across what's moving the market on the sector picture, every sector is in the green this morning except for one, and that's household goods. But the biggest gainer is the oil and gas sector. Oil getting a little bit of a bid higher as we have a little bit of a weaker dollar as barrels around the world are priced in the greenback. Also, autos doing well, more than 0.7%. Breathing a sigh of relief, Peugeot is sticking with their guidance, and retail and construction as well to the upside this morning. Now let's get the Bloomberg First Word News. Here's Laura Wright. Laura?
Thanks, Anne-Marie. The European Union looks set to keep its external borders shut to travellers from most of the world. Sources tell Bloomberg the ban may last at least 2 more weeks. The bloc may also shorten its list of 13 countries whose residents have the green light to visit. A rebound in cases is hampering efforts to reopen the borders. President Donald Trump's national security advisor has tested positive for coronavirus. He's the closest person to the president known to have contracted the disease, but the White House says Robert O'Brien's infection poses no risk to the president or vice president. Sources tell Bloomberg he's been out of the office since last week. New York health authorities are probing a charity concert in the Hamptons. It was opened by Goldman Sachs chief David Solomon, who moonlights as DJ. Governor Andrew Cuomo says he's appalled by egregious social distancing violations. The organizers say a 2-second video that's been spread doesn't accurately depict the event. Global News, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anne-Marie, Matt.
Laura, thanks very much. Laura right there with your First Word News out of London. Now, the ECB has told banks to freeze dividends until next year, until January next year. That's an extension of the March move to halt payments at least until October. So the ECB is giving it 3 more months. Says its request has kept about 30 billion euros of capital in the euro area banking system without going back to the investors that own those banks. Joining us now with more is Bloomberg opinion columnist Elisa Martinuzzi. So, Elisa, this isn't much of a surprise, is it?
I don't think so. Ever since the European Systemic Risk Board advised that this is what the ECB should do back in May, it was pretty clear that the bank supervisory arm would have to fall into line. The Systemic Risk Board is led by the ECB President Christine Lagarde, so it would have been more of a surprise had the ECB gone against that recommendation. But also bear in mind that in conjunction with today's announcement, the ECB also put out its vulnerability study of the European banks and how they would weather a very severe economic downturn caused by the pandemic and the lockdowns. And, it is acknowledged that some banks, doesn't identify which, but some may not have sufficient capital to meet minimum requirements by 2022. So, of course, with that in mind, it is doing what, it feels right to shield the system.
What about the long-term impact? Are there any concerns about what the dividend suspension means for the long term?
Of course, in the long term, it makes it harder for banks to attract equity investors, and particularly if they have to replenish their capital, it would be helpful to have certainty on the potential dividend trajectory. And over the long term, it also causes potentially some tension on the credit markets. It could become more pricey for banks to fund themselves if the perception is that banks would find it difficult to raise equity. So, and particularly given the the relative strength of the U.S. banks at the moment, it would over the long term there are implications for how those investors measure the two one against one another. And of course, if they do need capital going forward, clear dividend trajectory will be helpful.
The ECB also provided more clarity today on how it intends to end relief measures that it has been providing to banks. How helpful has it been? How helpful is it to give this guidance as well?
I think, very much is what, investors and banks will be looking to as well, because, of course, the relief measures are only good as long as you know that you have them, and providing a sense of trajectory there as well is helpful. And, to that end, the ECB said it won't require banks to start replenishing buffers that it had eased, certainly not before the end of 2022. So that, again, is an encouragement for banks to start, to continue to lend to the economy, not to fear that the regulator will turn around and quickly ask them to replenish buffers that have been eased. Again, the objective here is to ensure that banks keep lending to the economy, which, unlike the US, still relies heavily on bank lending to fund its growth.
Thank you so much. That was Bloomberg opinion columnist Eliza Martinuzzi. And European bank stock index is actually in the green today. A lot of this likely priced in. Now, moving on to the quest for a vaccine, the Moderna CEO says those who are most at risk in the United States, the elderly and the first responders, will receive the vaccine first if the FDA gives emergency approval to distribute while it undergoes review. Now, speaking with Bloomberg, the CEO said Moderna will underprice the vaccine during the coronavirus pandemic. Take a listen.
What we anticipate is you could have data, in the November timeframe. It is possible that we could have data in October. That is not the base plan. That is the best plan. And then when this happens, I think based on the data, the FDA could decide to give us emergency approval. And that will make the vaccine available in the US for people at our highest risk, the elderly, maybe healthcare workers, while the FDA reviews the file for approval for the general population. And so what we have been doing at Moderna, we raised $1.3 billion of capital in May to invest in raw materials, in equipment, hiring new team members and training them. And as we speak, we are making as many vaccines as we can with the goal of making 500 million doses, maybe up to 1 billion doses in 2021.
We just talk about how easy it's going to be to attract the necessary sort of demographics within the test. How easy is it going to be to attract those key demographics, the most vulnerable demographics, particularly seniors? Are you struggling in that area? Are people coming forward and wanting to take part in the test?
So it's a bit too early to know about the phase 3, given we just started this morning. But what I can tell you is over the last weeks, we've had thousands and thousands of people across the US asking us to come into the study. We've had people into the diverse groups, both elderly, African American, Latinos, and so on, which is very important for us. We want to make sure that the study has the right representation from the core demographics in the US that are at the highest risk.
This might be a silly question, but bear with me here. Is your vaccine an antibody vaccine? Is it a T cell? Like, how is it going to work as compared with some of the other vaccines out there?
Is a vaccine that is able to activate both B cell and T cells. So it's a bit complicated. The B cells provide, if you want, antibody, neutralizing antibody, and the T cells are used for memory. And what we've shown in the human study that was published in the New England Journal of Medicine 2 weeks ago is that we had a very high titer of neutralizing antibody, around 4 times more than people that are with convalescent sera, people that have been naturally infected. And we've also shown some CD4 T cells, which is a very good sign for the future efficacy of a vaccine. But at the end of the day, like everybody else, every other company, we have to run the phase 3 to really know the full efficacy of a vaccine.
We are, though, seeing other vaccines producing a T-cell response. Is this going to be one of the key differentiators, you think, as to whether or not we get a antibody and a cellular response? Is that going to be one of the kind of areas that we are going to, as people that are going to receive it, need to differentiate?
Yeah, I think people are very actively looking into those differentiation now because we don't have any more data. So everybody is trying, from industry, the scientific community, the regulators, to try to map out what do we know today from the phase 1 study for those that have run a phase 1 and published the data, and there are only a few companies, through the preclinical animal work, just to try to guess. But the real test that everybody is going to have to go through is to run for the US a 30,000 participant phase 3 study, 50% placebo control, every other person getting the vaccine, every other person getting a placebo, and measuring the number of events and to really know like this the true efficacy of a vaccine. People are trying to guess now, but the phase 3 is going to be the real test for everybody.
That was Moderna CEO Stefan Bancel speaking to our own Guy Johnson. Coming up, LVMH customers are curbing purchases of high-end fashion faster than the company can cut costs as the coronavirus bites. We discuss next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are just over 43 minutes into the session now, and we're looking at gains across European equity indexes this morning. Not huge gains, but nonetheless, we do see green arrows on at least the FTSE and the DAX, the CAC 40 down about 0.1%. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Delivery Hero has raised its full-year revenue guidance. That's as the food delivery company continues to benefit from the lockdown. Orders in the second quarter rose 94% from a year earlier. In June, it broke its record for monthly deliveries with over 100 million. Moderna has launched the first large-scale US vaccine trial. Alongside the National Institutes of Health, it plans to test the medicine on 30,000 people. The modern vaccine works by nudging the body's immune system into attack mode. If the trial is successful, Moderna could make 500 million doses in 2021. Pfizer and BioNTech say they've begun a later stage trial for their top coronavirus vaccine candidate. Their goal is to submit it for regulatory review as soon as October. That puts it on track for one of the most ambitious timelines to date. Unlike Moderna, Pfizer has not received funding from the US for the research. That's your Bloomberg Business Flash. Matt, Anne-Marie.
Laura Wright in London. Thank you so much. Now, LVMH customers are curbing purchases of high-end fashion faster than the company can cut costs. The Louis Vuitton owner's profit missed estimates as the coronavirus hit the demand for luxury goods and lockdown measures kept stores closed. Joining us now is Francesca Di Pasquantonio, Deutsche Bank luxury analyst. Francesca, thanks so much for joining us this morning. LVMH clearly under pressure. The store closures have hit them. Tourism has hit them. Luxury has always been notoriously bad when it's come to generating big ticket sales when it comes to online. Are they adapting quick enough, in your opinion?
I don't think it's a problem of the company adapting quickly enough. It's that the changes are happening so fast, all at the same time. It's the perfect storm with tourism completely absent. And when we consider that tourist spending is about 40% of the overall industry, this is quite a very meaningful impact to offset. Online is growing very, very strongly as stores are closed and consumers are chasing new ways and experimenting new ways of shopping. But again, this is facing, a very tough reality worldwide, and it's really more the top down than companies' ability to adapt.
Where do you see high net worth individuals holding back the most? I mean, is this a case of they don't want to spend the money because they're concerned about the financial outlook? Or is it a case of the stores are just closed and you can't go out and buy that Louis Vuitton scarf that you've been dreaming of so much lately?
It's a combination of the two things. On one hand, you can't shop. It's not very pleasing to shop. It's not such a wonderful experience. There may be other priorities at the moment, but also it's the feel-good factor, which is probably hit by the fear of the virus, the concerns on the macroeconomic outlook of the future. So it's really a combination of high net worth individual and, the affluent middle class, which is at the moment not reacting all at the same time in the same way. We have very, very strong signs that the business has recovered very, very significantly in China, for example, where LVMH quoted a 65% growth in the second quarter. And you ask, where would high net worth individuals shop? Where would they go? I think, this again is a continuation of the polarization theme that we've seen so much in the past few quarters. Consumers just go and shop for the brands that they feel mostly connected with, the brands which provide most newness, innovation, vibe, buzz. And we will see polarization continuing in the second quarter and beyond.
Francesca, we had LVMH today, but we're going to have Kering after the bell this afternoon. What can you tell us about Kering? What are you going to be looking out for?
Well, everyone will be watching very closely what the trends are going to be at Gucci, what the exit rate is going to be on the back of, a very strong recovery in China, in mainland China, mentioned by the LVMH for its core brands. Everyone will be expecting pretty much a similar strength to be reassured that Gucci is not being left behind in this market share and polarization game. So I think that will be the key data. The other element will be the extent of deleveraging, which is where the surprise came as far as LVMH is concerned, because while they surprised on the upside for sales, they clearly had provided a bit of a surprise on the profitability side. And again, operating deleveraging will be very closely watched following these results yesterday.
All right, Francesca, thanks so much for joining us. Really appreciate your time this morning. Francesca Di Pasco Antonio, Deutsche Bank luxury analyst, talking to us about LVMH and Co. Anne-Marie, do you ever say, like, I have to have this Louis Vuitton scarf, or is that just like a mandatory grandma gift?
No, that's not a grandma gift at all. I think it's any age gift. I will say, on my way to New York in March, there was a Louis Vuitton bag I wanted to buy, and I called my mother, and she said, we're in the middle of a pandemic. We might be going into a recession. Should you really be spending your money on another handbag, to be honest? And I didn't. I took her advice.
Good for you, and you should always listen to your mother. Great advice from Mom. Up next, we're going to talk big tech. Will the results, the earnings that we see, help to revive the sector's mojo? That's the MLive question of the day. We'll put that to their European leader. Christine Aquino joins us next. This is Bloomberg.
Okay, I'm placing an order to buy Japanese yen. The price I'm looking for 105,572. So I'm looking to buy Japanese yen at 105,572. Okay, the order placed.
Welcome back to the European Open. We are 53 minutes into the trading day. Still looking at some slight green arrows, 0.4% on the FTSE and the DAX. The CAC 40 is down about 0.3%, so a bit of a mixed market here. Joining us to talk more about this, Christine Aquino.
I will have to remove the order. Just wait, because it's moved too fast, too far. Let's see. If this movement will not execute, I will remove order for Japanese yen.
But it's substantially smaller than the Democrats, and it includes cutting jobless benefits. What do you think?
Yeah, absolutely, Matt. I think it is still a big question for investors as well, and that's why we're seeing a little bit more muted moves in markets today. And yeah, it's a good question because the details of the U.S. stimulus plan will really matter for investors here. Certainly, the plan to cut jobless benefits isn't great when your unemployment rate is at the highest in post-war U.S. history. But at the same time, investors do tend to reward any kind of action to help economies mitigate the impact of the virus. We've seen the same in Europe as well, after, of course, they had their watershed stimulus package rolled out last week. So, yeah, it really is.
The order to buy Japanese yen removed. I have to remove it. It's moved too fast. Yeah, fun. Let's wait for better time. Okay, so we remove the order.
Senate Majority Leader Mitch McConnell put forward. On top of that, we have Jay Powell speaking tomorrow. Where does this all leave the dollar?
Yeah, it's a great question because it seems like investors right now are looking at the dollar as kind of a proxy for how the U.S. government is handling the virus. We've seen kind of a similar action in the euro last week. It kind of acted as a proxy for investors' response to the process of getting a stimulus package together. And so we're seeing something similar to the dollar as well. And so it really boils down to how quickly they're going to be able to get a deal through and whether there's going to be a lot of consternation and discussions and whether that's going to prolong the process. But at the moment, it does seem like investors are rewarding or the corollary of that is punishing countries that are responding more slowly to the virus with stimulus measures.
All right, Christine, thanks so much for joining us. Christine Aquino there leads our MLive team in Europe. And remember, the question of the day is, what are tech earnings going to do? Are big tech earnings going to help those companies get their mojo back, or that sector that get its mojo back? That's it for the European Open. Stay with Bloomberg Television. Up next, you'll see Bloomberg Surveillance. Francine Lacroix later joined by Tom Keene. But if you like, you can switch over to Bloomberg Radio and hear me with Carolyn Hepker.
Stimulus. Take two. Republicans unveil a $1 trillion aid package to bolster the U.S. economy. Democrats give a harsh assessment of the plan, with Nancy Pelosi calling it pathetic. The ECB's request, the central bank asks European lenders to hold off on dividends and buybacks until next year to conserve fiscal strength. And precious metals shine at the cost of the dollar. Gold futures touched 2,000 for the first time ever. The Fed's two-day meeting could be a catalyst for further gains. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. The markets are definitely moving. Gold is also on the move. So let's get those to you in a second. I also wanted to show you LVMH. It's actually down quite significantly after a disappointed investors with earnings. So the picture overall is that actually stocks and U.S. futures are today pushing higher. The gold rally cooling somewhat, but it did touch 2,000 late yesterday. The VIX pretty much under control. And then LVMH dropped after the French luxury conglomerate reported earnings that missed analysts' expectations because of the lockdown. So you can see that stock down some 4.7%. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Senate Republicans have unveiled a $1 trillion plan to bolster the economy. The package announced by Majority Leader Mitch McConnell includes an extension to unemployment benefits, but at a lower level. It includes a cash handout of $1,200 and also a shield for businesses and schools from virus lawsuits.
So we have 1 foot in the pandemic and 1 foot in the recovery. The American people need more help. They need it to be comprehensive, and they need it to be carefully tailored to this crossroads. That is what this Senate majority has assembled.
Meanwhile, Democratic House Speaker Nancy Pelosi delivered a harsh assessment of the plan, calling it pathetic. Now, the European Union looks set to keep its external borders shut to travelers from most of the world. Sources tell Bloomberg the ban may last at least 2 more weeks. The bloc may also shorten its list of 13 countries whose residents have the green light to visit. A rebound in cases is hampering efforts to reopen the borders. The International Monetary Fund has approved $4.3 billion of funding for South Africa. It's the largest emergency payout yet to help fight the coronavirus pandemic. South Africa's government expects the economy to contract over 7% this year. Even before the pandemic hit, it was in its longest downward spiral, and that was since World War II. A Malaysian court has found former Prime Minister Najib Razak guilty on all charges in the first trial linked to the 1MDB scandal. The case involved around $10 million being deposited into his personal accounts from a former unit of the Development Fund. Now, Najib's lawyers say they will appeal that ruling. And New York health authorities are probing a charity concert in the Hamptons. It was opened by Goldman Sachs chief executive David Solomon, who does moonlight as a DJ. Governor Andrew Cuomo says he's appalled by egregious social distancing violations. The organizers say a 2-second video that has been spread around doesn't accurately depict that event. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now we're just getting some figures from Nissan. The full-year operating loss is coming in at 470 billion yen. That's almost double the estimated loss, because we were expecting a figure of 215 billion in terms of a loss, and we got 470 billion. Nissan also says that it sees a full-year operating loss, so 470 billion, as I said, but they're suspending the payment of the dividend for this fiscal year. Now, the ECB has also told banks to freeze dividends until next year. That's an extension of the March move to halt payments at least until October. The ECB says its request has kept about 30 billion euros of capital in the euro area banking system. Now, joining us now for more is our banking reporter, Nicholas Comfort. Nicholas, first of all, thank you so much for joining us, but how much of a surprise is this? We also know that they will review the stance on buybacks and dividends in the fourth quarter.
Well, we had reported last week that they were leaning toward extending the ban. It's been a pretty tough debate on the ECB supervisory board on this one, because there are some banks in Europe who are doing very well and who have high capital levels, and so there are some board members of the ECB who say, well, shouldn't we be allowing these guys to pay dividends? And others say, no, it's simply too unclear that the situation around the economy, all these payment holidays on loans, it's so unclear we can't do this right now. We've got to keep the ban in place. So tough discussions, but yes, investors had many investors had basically written off the whole year in terms of dividends, which is why you're not seeing such an impact in the stock market at the moment. Now, I mean, the question, though, is how does it change next year? And when do we go back to business as usual? I think it's pretty tough to keep this in place. The ECB doesn't have any legal power to keep this in place. They can go on a bank-by-bank basis. They can tell banks not to pay dividends, but there's a whole bunch of banks in Europe, and that's a lot of work to be doing as the supervisor.
So we know that BNP Paribas, Nick, in your great story, you lay it out saying they were lobbying to resume dividend payments. UBS had also hinted that they may return more capital to shareholders towards the end of the year. I mean, could there be a problem with compliance, or do they just kind of do what they're told, especially these big banks?
Well, I mean, we've got to differentiate on those two. So yes, BNP Paribas, as a big French bank, was going to promise one of the fattest payouts of European banks. And whether they comply, I think they'll probably have to. The ECB is saying it's a request, but it's a fist within a kid glove. I mean, they can force the banks if they need to. UBS, different kettle of fish, and that's where the problem lies. Because UBS is a Swiss bank, they don't come under ECB supervision. But then again, that creates a haves and have-not situation in Europe. I mean, between the banks who are under the ECB and can't pay dividends, and those under other supervisors who can go ahead and pay dividends, it certainly could make UBS be a more attractive prospect for some investors than a European bank who's not allowed to pay a dividend.
Nick, thank you so much for joining us. Nick Comfort there in Frankfurt for us. Now, up next, revival plan in the U.S. Republicans roll out $1 trillion stimulus proposal to kick off negotiations with Democrats. We'll get all of the details next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The virus is eroding demand for luxury products, and LVMH customers are curbing purchases of high-end goods faster than the company can cut costs. Profits came in worse than expected in the first half. For the 3 months through June, revenue fell 38%. Analysts expect it to be the luxury industry's worst ever quarter. Now, Delivery Hero has raised its full-year revenue guidance. That's after the food delivery company continues to benefit from the lockdown. Orders in the second quarter rose 94% from a year earlier. In June, it broke its record for monthly deliveries with over 100 million. And Peugeot maker PSA is sticking to its financial outlook. That's after generating a profit for the first half of the year. It suggests the French automaker has weathered the coronavirus pandemic better than feared. And Chief Executive Carlos Tavares sees a sales rebound in the second half of the year.
We will respect this all-weather floor guidance that is an average over 3 years, 2019, 2020, and 2021. So yes, it is an all-weather guidance, and yes, we will stick to it.
And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Senate Republicans have presented their $1 trillion, apologies, I lose my voice from time to time. It's the emotion of being on air. Their $1 trillion rescue plan to bolster the U.S. economy. Under this proposal, the GOP would see a trim in emergency jobless benefits. A second round of $1,200 payments to most Americans would also take place. But the deal is far from being done. Speaker Nancy Pelosi called the plan pathetic. Well, joining us now is Luke Bars from Goldman Sachs Asset Management. Luke, when you look at, good morning to you, first of all, when you look at the composition of the markets and what exactly is priced in, how much of the focus is on stimulus and stimulus coming from the U.S.?
Morning, Francine, and thank you so much for having me on. Look, I think it's a great question, and our view at the moment is that equity markets do need something to support current valuations, and that can be earnings, and to a degree we've seen through the course of this earnings season, to the extent that expectations became a little bit too bearish, and we've seen some positive surprises, that can be the justification of current earnings. But clearly the fiscal and monetary policy side of things is factoring into people's expectations as well. And we've seen some pretty significant moves in Europe, and obviously the approval of the fiscal recovery package in Europe will give that market a little bit of an additional stimulus. And I think we're expecting to see something similar come through in the US in due course.
To support the current valuations, what kind of stimulus do we need? I mean, I know, you're not a political analyst, but is there a ballpark, is it a figure or where the money goes?
I don't know if it's necessarily a figure per se. It's just to say that we need to have some kind of additional catalyst to continue the growth momentum that we've seen in the last few months. And I think in particular it has to be directed towards the right and appropriate areas of longer-term growth. So in particular, if we're going to see fiscal stimulus that's going to drive, for example, infrastructure development, then is that being done productively? Right, and I think that's a critical part of the European plan, where we're talking about roughly a third of that $750 billion that's going to green projects. So subsidizing renewables to the extent they still need some subsidization, but also investing heavily in smart grids and EV charging stations, green agriculture, green buildings, and really that can put the European economy on a path to sustainable growth over the coming couple of decades. And so if we see something similar in the US, in particular around that infrastructure development, that really can help underpin a more extended recovery as we go through the next few years.
You just mentioned some of the, the greener things that certainly here in Europe the Commission wants to invest in. Where overall do you see value in equities? Is it the, some of the things look so expensive, and I'm thinking of technology stocks. What about ESG companies?
Yeah, look, it's a very interesting discussion that we've been having internally, just in particular around this growth and value dynamic, because clearly we're at pretty extended spreads between those two parts of the market over the last 6 months or so. And I just say, taking a step back, if we think about the US market is up around 50 basis points on the year, but actually the median stock is down almost 20%. And it really has been those FANG stocks, those big tech names that are up almost 30-35% that have driven the broader market recovery. And so to an extent, there is some concern if we see some misses on expectations around earnings, and we've seen that in the most recent data, that some of those big technology companies where expectations were still pretty lofty have missed on the margin, and some of the cyclical companies where expectations have become a little bit too bearish have actually outperformed to the upside, that we get a small rotation in that growth and value dynamic. But that doesn't necessarily change our longer term view, which is a lot of those disruptive technology names, a lot of those companies levered into the millennial consumer, levered into that green recovery, are actually the place where you want to commit capital. Even if you have to accept paying a slightly elevated nearer term multiple, the long-term growth dynamics and the demand tailwinds that these companies are benefiting from, especially in a post-COVID world where a lot of these technologies are being adopted at a much more accelerated rate, should actually continue to perform very well.
So, look, how should I look at the post-COVID world? It's not going back to 2019 and the way we worked and the way we use our healthcare system. You know, how will the world be changed forever, and what does it mean for the investor looking at equities?
Yeah, it's a place we've obviously done a lot of research on in the last couple of weeks and months. And for us, really, the critical part here is what is benefiting in the moment. So because we're in periods of protracted shutdown and people are forced into specific practices and behaviors versus what is really fit for the future. And so for us, yes, there will be some lasting trends around work from home, and that has implications for office real estate, it has implications for suburban real estate, it has very big implications for things like cloud computing and data storage. But there's also some aspects around, let's say, video conferencing, which we'd say are a little bit less sustainable as people start to go back into the office. And I'd say on the consumer side of things, of course, we are likely seeing very elevated levels in terms of e-commerce penetration over the last 3 or 4 months. In particular, let's take the UK or the US, where we've seen roughly 10 years worth of growth in a couple of quarters. But whilst that might normalize a little bit, we would expect a lot of those first-time users of those platforms to continue to utilize them going forwards. And so for us, there's actually a lot of opportunity in that space. What we would highlight, however, Francine, I think this is a very crucial point, is that the scarcity of growth across equity markets is becoming more pronounced. So we are now at a point where realistically only 15% of companies we look at globally can deliver 8 to 10% top-line growth. And actually the amount of companies delivering less than 4% or even negative growth is now over 50%. So it really is about identifying where those pockets of growth are and being selective and very discriminatory in terms of how you're committing capital to make sure you are aligned to that post-COVID world, because there are a lot of things that have been buoyed by the nearer term dynamics that just aren't sustainable.
Luke, thanks so much. Luke Barzer, Head of Fundamental Equity Client Portfolios and EMEA at Goldman Sachs Asset Management, stays with us, and we'll talk a lot more about the millennial consumer next. Coming up, Goldman Sachs says a pandemic has made everyone adopt the millennial mindset. We'll ask if investors need to follow their lead. That's next. This is Bloomberg.
Okay, I am opening position at Japanese yen at 105.572. 105.572. And also I am placing an order to buy British pound and 128.58. So I'm placing an order to buy British pound at 128.58. Sorry, not to buy, sell short. I'm sorry. So one order to buy, one order to sell short.
You're watching Bloomberg Surveillance. I'm Francine Lacqua here in London. So should investors follow the young? My guest says the pandemic has made millennial trends go mainstream. Baby boomers shopping online for groceries, children engaging with e-learning and social interactions hosted online and live streams. But will these trends become permanent as the world gets back to normal, or will already expensive tech stocks look like they've been overbought? Let's get back to Luke Bars from Goldman Sachs Asset Management. And Luke, this is a little bit of what we were trying to get to previously, right, to try and understand actually how much of these changes will change and how much is it, people wanting that face-to-face interaction. Will it be different regionally? So will people behave differently in, I guess, tracking the millennial behavior in the US than it is to Europe than Asia?
Yeah, I mean, look, the reality over the last 6 months is we've all been forced to be millennial consumers, irrespective of our predisposition or how we've thought about it previously. That there's been a necessity to access things like online retail platforms. There's been a willingness and desire to access some of those online digital sharing platforms that just hasn't necessarily existed in the same magnitude previously. And as I said before, I think the acceleration we've seen, I mean, effectively 10 years worth of growth in online commerce in Europe and the US over the course of 6 months is pretty astronomical. Now, in terms of the regional differences, what I would say is e-commerce trends were already pretty pronounced in Asia and actually far ahead of what we see in the Western world. So just to put some numbers around that, if you looked into Korea or China, e-commerce as a percentage of retail sales was already at somewhere around 35%. So you already had pretty established acceptance of those e-commerce platforms, partly because the populations are more youthful, they're more comfortable with technology. That digital native consumer has grown up in a world where e-commerce is available to them. Now, UK and US have started to catch up on that front, and our expectation is some of those older generations who maybe previously haven't utilized those platforms will maintain use of them, but there is going to be some degree of normalization, at least in terms of the pace of growth.
What does that mean, Luke, for some of the things that will need acceleration? I know that there's also talk of a possible online sales tax. I mean, are these companies or online places that will be regulated and taxed more?
Yeah, and this is something we've discussed at length, where the risk to technology stocks globally, and in particular in the US, is that risk of regulation. And at this point, we don't really have a great framework for digital cross-border trade and how to tax that. And even if we were to see some advancement in the narrative around that, I think it's unlikely we'll get to a universal global standard. Now, that doesn't mean that these companies can't do well in the event that we do see localized standards and taxation structures. If we're continuing to see growth in adoption, if we're continuing to see the consolidation of some of these industries, where you have dominant players who can really deliver that value to customers in a pretty seamless fashion, then even if you do start to see a little bit of an incrementally higher taxation structure that's applied to them, we still feel reasonably positive around their longer-term growth outlook.
Look, is there a part of the market where you see these trends accelerating, which is basically maybe the trends that we would have seen in 5 years, seeing now, where you actually see more, more room to grow than in the past, or than in other parts of the market?
Yeah, we've talked a lot about e-commerce, obviously, and the one thing I'd say to e-commerce is that it has to be very specific to the country or region. As we said, it's not that you can pick one company and that can play the theme globally. There's going to be nuances in places like Latin America. There's going to be nuances, as we know, in places like China that are going to underpin that growth for those individual businesses. Now, I think the area we're probably most excited about at this point, and there are some major implications that come out of the COVID crisis for it, is in the healthcare space. And in particular, I would say around genomics and around telemedicine. Right, genomics, obviously, the process of trying to sequence the human genome to understand the nature of the disease that we're trying to tackle and allow you to provide some kind of precision.
I have to remove order to sell short British pound because it moved too fast, too far. Okay, so the order to sell short British pound removed.
Whilst it has elevated the awareness around genomic technology, hasn't necessarily changed the technology.
Thank you so much. Luke Barzer, Head of Fundamental Equity Client Portfolios in EMEA at Goldman Sachs Asset Management.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The European Central Bank is extending its request the banks hold off on shareholder buy payouts. It's a blow to some lenders who lobbied to resume business as usual. The central bank is asking banks to not pay dividends of buyback shares until next year. That's 3 months longer than initially indicated. President Donald Trump's national security advisor has tested positive for coronavirus. He's the closest person to the president known to have contracted the disease. But the White House says Robert O'Brien's infection poses no risk to the president or indeed the vice president. Sources tell Bloomberg he's been out of the office since last week. Spain's Prime Minister has hit out at the UK's quarantine measures for his country. In an interview with local television, Pedro Sanchez said the decision was unbalanced, adding the Balearic and Canary Islands have fewer virus cases than the UK. Being so reliant on tourism, Spain is desperate to convince the UK to reconsider the move. And Germany is warning rising infection rates could reignite the virus. It's calling on people to stick to containment efforts. Germany plans to make testing rather than self-isolation mandatory for travelers returning from high-risk areas. Chancellor Angela Merkel's chief of staff says a higher infection rate in the summer makes a spike during the fall even more likely. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now let's talk about the race for a vaccine to combat the spread of the coronavirus. Moderna Chief Executive Stéphane Bancel says those who are most at risk in the U.S., the elderly and first responders, will receive the vaccine first if the FDA gives emergency approval to distribute it while it undergoes reviews. While speaking with Bloomberg, Bancel said Moderna will underprice the vaccine during the coronavirus pandemic.
What we anticipate is you could have data, in the November timeframe. It is possible that we could have data in October. That is not the base plan. That is the best plan. And then when this happens, I think...
Position opened on Japanese yen. I opened long position on Japanese yen at 105.572.
Population. And so what we have been doing at Moderna, we raised $1.3 billion of capital in May to invest in raw materials, in equipment, hiring new team members and training them. And as we speak, we are making as many vaccines as we can with the goal of making 500 million doses, maybe up to 1 billion doses in 2021.
We just talk about how easy it's going to be to attract the necessary sort of demographics within the test. How easy is it going to be to attract those key demographics, the most vulnerable demographics, particularly seniors? Are you struggling in that area? Are people coming forward and wanting to take part in the test?
So it's a bit too early to know about the phase 3, given we just started this morning. But what I can tell you is over the last weeks, we've had thousands and thousands of people across the U.S. Asking us to come into the study. We've had people into the diverse groups both elderly, African American, Latinos, and so on, which is very important for us. We want to make sure that the study has the right representation from the core demographics in the US that are the highest risk.
This might be a silly question, but bear with me here. Is your vaccine an antibody vaccine? Is it a T cell? Like, how is it going to work as compared with some of the other vaccines out there?
Is a vaccine that is able to activate both B cell and T cells. So it's a bit complicated. The B cells provide, if you want, antibody, neutralizing antibody, and the T cells are used for memory. And what we've shown in the human study that was published in the New England Journal of Medicine 2 weeks ago is that we had a very high titer of neutralizing antibody, around 4 times more than people that are with convalescent sera, people that have been naturally infected. And we've also shown some CD4 T cells, which is a very good sign for the future efficacy of a vaccine. But at the end of the day, like everybody else, every other company, we have to run the phase 3 to really know the full efficacy of a vaccine.
We are, though, seeing other vaccines producing a T-cell response. Is this going to be one of the key differentiators, you think, as to whether or not we get a antibody and a cellular response? Is that going to be one of the kind of areas that we are going to, as people that are going to receive it, need to differentiate?
Yeah, I think people are very actively looking into those differentiation now because we don't have any more data. So everybody is trying, from industry, the scientific community, the regulators, to try to map out what do we know today from the phase 1 study for those that have run a phase 1 and published the data, and there are only a few companies, through the preclinical animal work, just to try to guess. But the real test that everybody is going to have to go through is to run for the US a 30,000 participant phase 3 study, 50% placebo control, you know, every other person getting the vaccine, every other person getting a placebo, and measuring the number of events and to really know, like this, the true efficacy of a vaccine. People are trying to guess now, but the phase 3 is going to be the real test for everybody.
Well, that was the Moderna chief executive, Stéphane Bancel. Now, coming up, have gold prices risen too far, too fast? Well, there's no end in sight to the current economic turmoil. Investors may seek out more bullish signals before pushing prices higher. We'll discuss the prospects for the precious metal next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The virus is eroding demand for luxury products, and LVMH customers are curbing purchases of high-end goods faster than the company can cut costs. Profits came in worse than expected in the first half. For the 3 months through June, revenue fell 38%. Analysts expect it to be the luxury industry's worst ever quarter. Meanwhile, Pfizer and BioNTech say they have begun a later-stage trial of their top coronavirus vaccine candidate. Their goal is to submit it for review as soon as October. That puts it on track for one of the most ambitious timelines to date. Unlike Moderna, Pfizer has not received funding from the US for research. Intel has ousted its chief engineer less than a week after falling further behind in production technology. The company's vast chip design and manufacturing operation will be split and led by other leaders. Intel says the changes are to accelerate production leadership. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, have gold prices risen too far, too fast? The yellow metal's record-breaking rally is showing signs of losing steam after futures touched $2,000 an ounce for the first time. While there's no end in sight to the current economic turmoil, investors may seek out more bullish signals before pushing prices higher. So far this year, gold is up around 27%. Silver is up more than 30%. Well, joining us now for more on this is Mobeen Tahir, Research Associate Director at Wisdom Tree. Mobeen, thank you for joining us. Actually, are there any fundamentals supporting the gold's ascent?
Absolutely. Thank you for having me, first of all. So upon a first glance, it seems quite counterintuitive that both equities and gold have been going up since March of this year. But if you take a closer look, it actually makes sense. Now, what's been happening is that equities have largely been lifted by monetary accommodation from central banks, despite all the risks. But investors are indeed aware of these risks. It's just that this awareness isn't coming through in the form of a high reading of the VIX index. Instead, what we see is that a lot of support is going towards gold. So gold is actually being used to hedge all the risks facing equity markets and all risk markets in general. So what that means is that gold has now become the new put option in markets.
So what does that mean, Mobeen, for, how furthermore gold can actually rise? I mean, could we, go over 2,000, stay over 2,000, and then what's the next level?
Yeah, so that's a great question. So I mentioned risks, right? So if we think about what risks are still out there, at Wisdom Tree, we believe there are three main risks still to consider in the very short term. Number one, second quarter data. So corporate earnings may disappoint Wall Street, and GDP data from the US and Europe, which is going to be announced for the second quarter in the next few days, could actually present a reality check for markets. Number two, infections are still on the rise, and of course, vaccine hopes may still be premature. Number three, geopolitical tensions are on the rise between the US and China. So risk assets may wobble in the face of these risks in the short term, let's say in the next few weeks, but monetary accommodation may still lift them up again. But gold will continue to serve as a hedge against all of these risks as a safe haven asset, and this could even create a scenario where both risk assets and gold continue to push up from current levels.
What happens, Mobeen, if we get a bit of inflation out there? What does that do to gold prices?
So the interesting thing is to understand what is actually driving inflation. So if inflation actually returns because, let's say, the current pandemic is overcome and the world returns to an environment where growth comes back to the economy, people start buying things again, and inflation returns. Now, from a safe haven perspective, gold may pull back a little bit in that scenario because maybe the risks have eased off a little bit. But from an inflation point of view, gold is a very important inflation hedge, which is why investors have been turning towards gold in the face of all the monetary accommodation, because monetary accommodation typically erodes the value of fiat currencies. So gold serves as a great store of wealth. So if inflation returns, people will actually continue to seek out gold.
Mobin, if you look at, if we see a correction in gold, and I don't know if we do see it or whether you predict we'd see it, what would drive it? What would be the catalyst?
That's a very important question. So at WisdomTree, we believe the main catalyst for a major correction in gold would be a scenario where the world recovers in a V-shape, which is not our base case or central scenario. So a V-shaped recovery could come about if, suppose, a vaccine has been developed. It's not only developed, but it's distributed widely around the world. And the current crisis with the infections is really brought under control. So in that sort of a scenario, we go back to a world where things are like the way they were in 2019, and risk assets suddenly really spike up, and gold probably pulls back because the safe haven demand deteriorates. So that is probably the scenario where gold will pull back, but it's relatively low probability at the current state.
Mobin, is gold being traded more through ETFs or something else?
So the great thing that we see in terms of trend for gold, and that's not just this year in 2020, in fact, this trend started in 2019, was that the biggest driver for gold has been sentiment. And the way to break down sentiment is to look at two things. One is positioning in net speculative positioning on futures exchanges, which has been going up, especially in the last few weeks. And second is flows into exchange-traded products, like you mentioned. So both those things have actually really been going up this year, which is why gold has been supported. So we see strong sentiment and strong momentum behind gold at the moment.
Thank you so much, Mobin Tahir, the Research Associate Director at WisdomTree on gold. Now, coming up, Lloyd's Banking Group has a new effort to improve staff diversity, and Moody's is calling it the plan credit positive. We talk more about investor calls to promote equality in the workplace next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's take a look at what you should be watching out for today. Fed officials will confront clear signs that the U.S. recovery is stalling when they gather for their two-day meeting today. Economists expect they will probably hold fire on additional stimulus while Congress debates more fiscal aid. Later this morning, the Chinese President Xi delivers a keynote speech at the opening ceremony of the AIIB annual meeting, and then later today, a host of economic data from Brazil. Forecasts are for a jump in the unemployment rate, a surplus in the external current account, and new highs for the country's, of course, public deficit. Now, disability inclusion is shaping up to be the next frontier in ESG investing. Investors are pushing companies to create more welcoming places for employees, whether their disability is visible or not. Well, joining us now to discuss the recent push is Bloomberg's Danny Berger. So, Danny, why are investors concentrating on this issue now?
Well, we know, Francine, that ESG has been something that investors have cared about for some time now, but we usually just hear about the environmental and governance portion of it. But social is becoming more important, and something like disability equality is something that's especially been ignored. So investors are seeing this as an area where companies can really improve, and not just because it's the right thing for companies to do, but it also increases profits. It gives them a wider access to a more diverse set of talent. For example, in 2018, Accenture did a report that showed companies who had more programs to help those with disabilities and have better and higher practices saw a 28% increase in profit and double the amount of return as their peers over a 4-year period. So this is especially pertinent now, considering that people with disabilities have had a much higher unemployment rate, have been disproportionately impacted by the coronavirus. And just this past May, we saw a group of about 22 investors send out a call to action for different corporations, saying that they wanted to see more action done on improving equality in the workplace when it comes to disabilities, because at the end of the day, Francine, this is something that is good for companies to do when it comes to profit and, again, getting more innovation and more diverse talent.
Speaking of diversity in the workplace, Lloyd's outlined a race action plan to promote more black employees. What has been the reception for that, Danny?
Yeah, this is another example where we see really good reception for social action, that S portion of the ESG. So Lloyd's plan, part of it is to raise those in leadership positions who are black employees to 3% by 2025. Currently is just at 0.6. They also want to see better educational programs. They're going to publish an ethnicity pay gap report this year. And according to Moody's, this is a credit positive step. It's something that on one hand is just a good thing to do, but also helps reduce that social risk. And again, issues of ethnic diversity in the workplace, the underrepresentation, especially in the financial sector, is something that's received increased scrutiny, especially with the Black Lives Matter movement, for example. So this is something that, again, investors and companies have really begun to concentrate on, Francine.
Danny, thanks so much. Danny Berger there with the very latest on some of these important movements. Now let's get the latest on the ongoing row over UK quarantine policy. The Spanish Prime Minister Pedro Sánchez has responded pretty angrily to the ratcheting up of UK travel restrictions. The Foreign Office has extended its advice to Britons to avoid non-essential travel to Spain's Balearic and Canary Islands. Now, this comes just days after the UK mandated a 14-day quarantine for anyone returning from Spain. Let's get more now with our UK government reporter, Alex Morales, who joins us on the phone. Alex, great to speak to you. There was quite a swift change to the rules on quarantine and some confusion over the Spanish islands.
Yes, indeed. So I think the advice went out that Spain had been added to the list where you had to quarantine if you were coming back from Spain. But the Foreign Office advice was still that you didn't have to avoid essential travel to the Balearic and Canary Islands. And when the discrepancy was pointed out, they changed it pretty swiftly. But clearly, it's an example of how confusing the situation can be for travelers who want to get away on holiday, but now there's just so much uncertainty about, well, if you go away and the rules change while you're away, what happens when you come back?
Alex, I mean, this comes also as we had a report that just 3 people have been fined for breaking quarantine rules. So is there a concern that actually these rules, take people by surprise, that there's not enough notice, but then also they're not really enforced once people come back in the country?
Well, certainly the small amount of fines would lead you to the conclusion that perhaps they're not being enforced very strongly. I mean, the government says it's carrying out the necessary checks. Just to be clear, those 3 fines are for people who, at the border on coming in, refuse to give their contact detail of where they would be, so that the quarantine could be enforced. A single person has been fined for actually breaking the quarantine rules when they've not been where they're supposed to be in self-isolation.
A speculation that France and Germany might also be added to the UK's list of countries having to quarantine when you come back from them, Alex.
Well, I mean, yes, that is just that. It's speculation. I mean, I think people saw that what happened in Spain was there was an uptick in coronavirus cases, and that's what led to the Spain being put back on the list. And clearly, I think in Germany and France there's also an uptick, probably not to the same extent as Spain, but obviously that leads to speculation that those countries could also be added to the list.
Alex, how much is the government, still getting quite a lot of harsh questions on how they handled the pandemic at the start, and is that actually changing their line of thought for the future?
Well, I mean, it's hard to say whether it's changing their line for the future, but certainly, every time a minister goes up before the press, people are asking them, well, would you have done this differently? Would you have done that differently? And Boris Johnson has now acknowledged publicly that there will inevitably be an inquiry into the handling of the situation. But I think the government's efforts at the moment are saying, we don't want the inquiry now. We want to be focusing on getting the economy back running and on keeping the virus suppressed in the UK.
Thank you so much. Alex Morales, their UK government reporter, talking us through exactly the thinking of the UK government. Now, the markets are on the move. The markets are focusing a bit on the positives, actually, that they're seeing out there. So let's get a quick market check if we can bring it up. Stocks are gaining. The gold rally is cooling after touching 2,000 yesterday. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. We'll be looking ahead to tomorrow's Fed decision with Charles Plosser, the former Philadelphia Fed president. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
stimulus take two. Republicans unveil a $1 trillion aid package to bolster the U.S. economy. Democrats give a harsh assessment of the plan, with Nancy Pelosi calling it pathetic. The ECB's request, the central bank asks European lenders to hold off on dividends and buybacks until next year to conserve fiscal strength. And precious metals shine at the cost of the dollar. Gold futures touched $2,000 for the first time ever. The Fed's two-day meeting could be a catalyst for further gains. Well, good morning, everyone. Good afternoon if you're watching from Asia. This is Bloomberg Surveillance. I'm Francine Lapa in London, Tom Keene in New York. Tom, we look at gold prices, the rally actually fading somewhat. Stocks are up, but we really look at the stimulus in the U.S. and then the Fed meeting to give us an indication of what the U.S. economy will or won't do.
We got the Fed meeting coming up, but yes, the stimulus is really front and center. All the late night deal. There's a real effort, Francine, for people here to talk. I was really impressed that the White House members went up to the Hill on the weekend. That's highly unusual. So there's a real effort to do the FaceTime, but let's not kid ourselves. They're far, far apart, and I can't convey enough, Francine, how for everyone in America the clock is ticking here on July 28.
Yeah, and this is a huge deal, right? Because it's rents needing to be paid and things like that and fees. So we'll have plenty more on that throughout the 2 hours. Let's get straight down to the Bloomberg First Word News in New York City is Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. The battle is on over what the next coronavirus stimulus relief bill will look like. Senate Majority Leader Mitch McConnell unveiled the Republican proposal. House Speaker Nancy Pelosi called it pathetic, but says she'll try to find some common ground. The plan would reduce extra unemployment benefits and send $1,200 payments to most Americans. The coronavirus is reaching a plateau in some of the hardest hit U.S. states. That's after health officials imposed unpopular measures like closing bars and requiring masks. Florida reported its fewest new cases in almost 3 weeks. Texas had its lowest total in 2 weeks. Now states wonder whether they can keep infection rates down until a vaccine arrives. And China is buying American imports, but not enough to hit the terms of the two nations trade deal. That's according to the Bloomberg calculations based on Chinese customs agency data. In the first half of the year, China had bought about 23% of the total purchase target for 2020. Purchases of farm products have stepped up the last 2 months. The European Central Bank has asked that banks hold off on dividends or share buybacks at least until January. That's a blow to lenders who wanted to return to business as usual. The ECB also asked banks to show moderation when it comes to handing out bonuses. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equity, bonds, currencies, commodities, and it's a summer doldrum. It's a really quiet tape out there today. Futures up 3, Dow futures up fractionally. They could be read in a second here. The VIX 25.04. What I would point out is yields compressed down yesterday, and then with a better tape and the better action through the day, we really saw a nice yield pickup. And the 10-year yield 0.61% is distant from that 0.57 of yesterday. Other than that, Francine, it is the summer doldrums in the markets.
Yeah, it is. The interesting thing, Tom, and we've been talking about it quite a lot, is gold, right? So it touched 2,000, but today that rally seems to be fading somewhat. Still, it's 1,932. European stocks are climbing, and I wanted to show you a stock, LVMH, actually. That's dropping after the French luxury conglomerate earnings missed analyst expectations. So just a good way of looking at some of the retails that are struggling, even if they have an online presence. Now, to talk about the ECB, to talk about the stimulus in the markets, joining us now is David Riley, Blue Bay Asset Management Chief Investment Strategist. David, when you look at the markets and what they're being driven by, how much of the focus is actually stimulus in the U.S., the size and the scope, and who it will go to?
Well, I think in the near term, the stimulus package that the market is expecting to come out of Washington is absolutely vital. I do think that one of the key lessons that we learned in the aftermath of the global financial crisis and also the Eurozone sovereign debt crisis is that policymakers introduced austerity too soon. They withdrew fiscal stimulus too soon, and there was far too much reliance reliance on central banks. I think, or I hope certainly, that policymakers this time round will recognise that fiscal has to do more of the heavy lifting in terms of supporting the recovery. And some of the data is starting to weaken in the US because of the upsurge in cases, even though that may now start to be approaching a plateau. And so if we don't get a deal, the US economy faces a fiscal cliff, a fiscal headwind, just as the momentum around the recovery is starting to weaken. So I think the stakes are very high indeed. As I say, I think the market is expecting that we'll get a deal, but as you've been highlighting, there's still a lot of negotiation to be done, and time is fast running out.
David, does it make a difference if it's $1 trillion or if it's much more, if it's like 1 or 2 in terms of how the size of the package?
Well, I think it does make a difference, and I think actually bigger is better. We can worry about deficits and debt at a later date when the economy is actually on a sustainable growth path. I do think that if we get a deal which is round about expectations, 1 to 1.5 trillion, I don't think we'll see much reaction in terms of risk assets. If we get a bigger deal than that, then clearly I think that will be pretty supportive, because it will reinforce the commitment to sustaining the recovery. But it feels quite asymmetric, as I say. If there's not a deal, or it gets delayed and it's on the smaller size, and also implementation perhaps is delayed through August into September, then I think that will be a significant concern. I think that will spill over into financial assets.
David, it is the oddest summer in our lifetime. And, I don't know, folks, this is where I am, where I really wonder if I can keep track of the calendar, track of the cadence of the months as we stagger into August. David, do you feel like you need a reset into Labor Day, into the early autumn months, or are you steady as you go within your ideas and within your asset allocation?
Well, I certainly feel that I could personally do with a reset, so I have some sympathy with you there, Tom. In terms of portfolio construction, taking a little bit of risk down. I do think that with the stimulus that we're currently expecting to come out of Washington, obviously we had the EU Recovery Fund, not really expecting too much from the Fed over the next 2 days, then it's hard for me to sort of see what are going to be the sort of positive catalysts for a sort of meaningful move higher in growth sensitive risk assets. So I think it actually makes sense to be a little bit closer to home as we go through the summer, and as we then as you say, approach Labor Day. I mean, there's going to be a big deal around when we go into the Northern Hemisphere winter as to what's going to happen in terms of the virus. I mean, it's clear that not only the US but Europe is struggling to contain this virus.
Well, we're certainly hearing that from the virologists that we're speaking with. But David, the idea, the illusion of May was there was a bridge somewhere being built out there in over 2020 to somewhere. Where's that bridge heading right now?
Well, I think that the destination or the endpoint for that bridge is going somewhat further into the distance. I mean, we've had a strong, relatively strong bounce after the lockdowns, and we'll get a good sense, this week with the GDP prints for Q2 about just how deep, extraordinarily deep, those economic downturns and recessions and the damage from this pandemic has been. But I think the way that the market's been responding, we talk about bubbles, but the reality is we've almost got a kind of deflation, secular stagnation trade going on. We've got declining real yields, rising gold prices. We still have the kind of mega cap growth stocks which are outperforming sort of value and cyclicals. And I think what that's telling us is that the market is kind of coming around to the notion that actually, this isn't going to be a V, and it's actually going to be a long haul. And that long haul to get to the other side of that bridge, as you describe it, Tom, it's going to be taking us into, late 2022, 23, I think.
How much of a long haul? I mean, 2022, 2023, David, with this, if you look at the number of cases at the moment in Europe, And it doesn't matter whether it's a second wave or a first wave, but are we going to be in a start and stop situation much more than we were expecting? And is that the thing that worries you in terms of a recovery?
Well, I think the reality is that we are going to have to live with this virus for, a long period of time. Even hopefully a vaccine is developed, and obviously we're getting some positive news on that, and is ready, say over the sort of next 6 to 9 months. It's still going to take a long period of time before that vaccine is rolled out and we have, if you like, genuine herd immunity. So I think, the restrictions on activity, social distancing, the sector and labour market dislocation that's coming from this virus is going to be take a long time to heal, even if we do have positive progress, as I obviously hope we do, in terms of vaccine development. So it's going to be a long haul. We're going to have to live with this and adjust.
And the important insight there is out to 22 and 23 from David Riley of Blue Bay Asset Management, and we will continue. He is a manufacturer, shown the door at Renault. He's ex-Michelin, with a career in manufacturing process. Thierry Bolloré will take over at Jaguar Land Rover as their Chief Executive Officer. Please stay with us. Futures up 2. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Good morning, everyone. Bloomberg Surveillance. Kevin Cerulli will be joining us later on the stimulus. He's been looking at it all through the night. Francine Lacroix in London and Tom Keene in New York. That is a front and center story, but there's a lot of other stories this morning. One thing I failed to mention in the data check is some of the EM currencies are really getting nungy. Turkey, with its own set of issues, including real tension between Turkey and Greece. Turkey weakens out just now, printing 6.90, nowhere near record weakness, but nevertheless edging up towards a new weaker trend on Turkish lira. That's a nice setup with David Riley of Blue Bay Asset Management on EM. EM, to me, David, is a mystery. It's like a wait and see to have it unravel. Will EM unravel with this global slowdown in world trade?
I don't think it will unravel. I don't think we are going to face a systemic emerging market crisis, but clearly, a lot of different countries are facing a whole set of different challenges. And you mentioned Turkey, and there's obviously geopolitical risk associated with Turkey, but there's also a policy arrangement which is, driving very rapid credit growth with a large current account deficit, declining foreign exchange reserves. So I think that does render Turkey vulnerable. But I do actually think there's some value in European corporate credit. And one thing which does support the emerging market asset class is, valuations are a little bit more attractive than developed markets, and positioning is very light. Nobody's in there. It's not a situation where there's sort of overstretched positioning on the investor side. So actually, selectively and tactically, I think there are some opportunities to add risk within emerging markets.
Well, you got that fancy map behind you. Give me a name. Give me a country that's attractive. I mean, is it Pacific Rim, where, is it South China Sea adjacencies where they're so cheap now you just have to own Vietnam, et cetera? Where's the country where Francine can get started on the autumn?
Well, one of the sectors and regions I like is, for example, China real estate and property developers. If, I talked before that we're not going to get a V-shaped global recovery, but the one country that does, or getting closer to a V-shape is actually, so far at least, has been China. So I do quite like China and Chinese assets, and as I say, real estate in particular. I do think there's some value in some of the higher rated investment grade emerging market sovereigns, which continue to trade at a discount to their developed market counterparts. Some of those are in Asia, but some of them are actually in the Gulf as Gulf as well. And across emerging market, local, this may be a surprise, but I actually think Brazil, there's a lot of bad news. There's a lot of negative developments going on there. But I think there's some tactical opportunities in local markets and in Brazilian real as well.
David, I know in the past you were quite bullish on some of the European bonds. I know this was like 10 days ago, but does the EU Recovery Fund really change your view on them? Is now the time to be invested in Europe?
I do think the European Recovery Fund was a big deal. I think a lot of commentators have tried to downplay the significance, that it was a one-off, but I think the precedent has been set. We actually have a counter-cyclical fiscal policy and EU-wide shared policy response to a crisis, which is in very stark contrast to what happened in the aftermath of the global financial crisis and the Eurozone crisis. I think it reduces tail risks of Euro breakup, which are pretty small in my view in any case, and it is going to be meaningfully amount of fiscal stimulus for the likes of Spain and Italy. So I think it's too early to take that trade-off. I think we're going to see further convergence in Eurozone government bond yields. So I still like the Eurozone periphery. I still actually do like Euro assets and Euro credit more generally.
Yeah, what part of the credit market do you like?
So I still think there's some room for spread compression on Italian bond yields. We're currently at something like 145 to 150. I think that can tidy quite a bit meaningfully towards sort of pre-pandemic spread levels. I still also think that there's value in European investment grade credit in particular. I think triple Bs, and I do very much like European banks subordinated debt, where you're getting 5-6% yields. We heard the announcement today about further deferring dividend payments. I think there are some question marks about that in terms of the longer term health for banks and their cost of raising equity. But in the near term, I think actually it's, if anything, a positive for credit investors like myself.
What about European equity shares in banks? I mean, I know it's away from what you do, David, but we find interview to interview a real fascination about the European banks.
Yeah, I mean, they've proved to be a value trap because every time you kind of look at relative valuations and performance of European bank equity, you start thinking, well, there's some real value here. And, you know, even as a credit investor, obviously can't be indifferent to what happens to the equity valuations of European banks. Yeah, it's still, I mean, it's still a cyclical asset. It's still a very difficult time. The earnings outlook, we still obviously going to see some, as we've seen in the US, increasing provisions for non-performing loans as a result of the scarring from the pandemic and the recession. So it's hard to get, I think, bullish even at these valuations, but a lot of bad news is already in the price for the whole capital structure of European banks, ranging from equity down to the subordinated bank debt that I'm invested in.
David Riley, thank you so much. Very, very helpful. Nice brief here. David Riley with Blue Bay Asset Management. Over on the equity side, we will continue to look at the stock market. Tobias Lefkovich here in earnings season, Managing Director, Equity Strategist. It's Citigroup. We'll do that in the 8 o'clock hour. Really timely to talk to Tobias. Of course, those tech earnings coming along in a few days. A Fed meeting Wednesday. It's Bloomberg. Good morning.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg Business Flash. Nissan has issued an outlook for a bigger-than-expected loss for the fiscal year. The Japanese automaker expects to post $4.5 billion in operating losses. It also plans to skip its dividend. The impact from the coronavirus pandemic has forced Nissan to speed up cost cuts. Pfizer and BioNTech have begun a late-stage trial for their coronavirus vaccine. They're hoping to submit it for regulatory approval as soon as October. That would be one of the most ambitious timelines so far. And it places the two companies alongside frontrunners like Moderna, which announced it started its own final stage trial. And one of America's oldest gun makers has filed for bankruptcy for the second time in 2 years. Remington Outdoor now has plans to sell the 2-century-old company. Demand for guns has soared since March because of the pandemic and civil unrest, but Remington was overwhelmed by debt. And that's a Bloomberg Business Flash. Tom Francine.
Ritika, thanks so much. Let me look at the data. One of the quietest screens I've seen in this 2020. Futures -2. They were green, red, green, red, green, red. The VIX 25.20. And other than that, it's a struggle. I do want to point out Turkish lira at 6.90 is a weaker lira this morning. Francine?
Yeah, European stocks climbing on the back of strong earnings reports. Gold stabilizing, Tom, below $2,000 an ounce. U.S. futures, as you're saying, pretty much fluctuated. And then I just want to, show you LVMH, just because there's not that much on the markets, and it did drop after the luxury company, put out earnings that missed analyst expectation. And this is despite having a pretty good online presence. So it's interesting to see what happens to luxury retailers. Now, coming up on Balance of Powers, Max Baucus, the former U.S. ambassador to China. They'll talk about U.S.-China, they'll talk about the security law, and of course, trade. That's at 12 p.m. in New York, that's 5 p.m. in London, and this is Bloomberg.
On the strategic future of the company. We're long past the stockpiling phase now in North America, and what we're seeing is big big shifts from category to category. So things like hand hygiene growing very quickly.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, gold's record-breaking rally is showing signs of losing steam today. But this week's Fed meeting may actually open a path for further advances. Well, joining us now to talk about the price for gold is Georgette Bollet, ABN AMRO Senior FX and Precious Metals Strategist. Georgette, thank you so much for joining us on the phone. What exactly are the fundamentals actually driving gold prices higher?
Now, the thing with gold prices at the moment is that you have a combination of factors which are all positive. For example, on the monetary policy front, you have central bank easing monetary policy aggressively, as well with QE, very, very low rates, close to zero. In Europe, even negative rates. In the US, you have negative real yields, so it's nominal rates adjusted for inflation, and that is usually an environment that gold prices do very, very well. In addition, you have the fiscal policy. You have a lot of countries stimulating their economies, resulting in quite a lot of fiscal deficit, high percentage of fiscal deficit. And there are quite some investors worried about that. So the combination of loose monetary policy and high deficits on the fiscal side is what investors are worried about. In combination, I would say the negative yields in the Eurozone, as well as the negative real yields in the US, I'm very, very positive for gold prices. Yeah.
Georgette, what would it take for gold to see a correction? What would be the catalyst for that?
I think if investors are satisfied with the moves they have seen, we reached on the futures level already 2,000 this morning with very thin trades. So it could be that they say, okay, we have made a new high, we even reached 2,000, let's take some profit. And I think that is, increasingly likely, I would say, because at some point in time you will not find a lot of new buyers because positions are very, very high. At the same time, the ones who already have bought gold may say, okay, let's take some profit. So it's very crucial what happens around these levels, as we already have reached the psychological level of 2,000.
Tell us about the positioning of gold. I mean, it's been a moonshot from just under $1,700 per ounce. Does gold behave like a normal stock in terms of positioning and how people buy and sell, and then how the bid and the ask move?
I would say that gold is increasingly behaving like a financial asset, such as stocks. And if I look at the positioning, you have investors buying massively into gold ETFs. And they have different specifications, of course, per fund. But these positions are at a record. At the same time, there are also investors buying inside the futures market. These positions are high, not extreme. So I would say overall, positions are quite extreme. And that also means that investors change their mind or are satisfied with the move they have seen. They could also, profit taking could result in quite a big drawback.
I mean, I went back and forth yesterday with Dennis Gartman, folks. He's been absolutely brilliant on gold, gold and yen, gold and euro as well. And he's got some real caution here just because everyone's on board the trade. Georgette, how do you feel about the idea that it seems like every 3 a.m. ad out there is to buy gold? I mean, isn't that top of the market when we see those kind of ads?
Usually it would make me cautious. The only thing is it's already going on for quite a while, and people get more and more optimistic on the way. But and especially the last part of the rally was mainly dollar weakness. But I would, if it goes so fast and people are so optimistic, I would get cautious. I think it goes too fast. And it's becoming more, it's difficult to say if it's topish or not, but for me it goes too fast.
All right, Georgette, thank you so much. Georgette Bowler there, ABN AMRO Senior FX and Precious Metals Strategist. You know, Tom, in Europe, actually, because the market is regulated, you can't actually ask for investments like that. We don't have those gold ads, but I'm looking forward to seeing them when you send them over so I can actually have a look at who's
we're really starting to see, starting to see a lot of them. You see it every cycle. Every time gold goes up, buy this, buy these coins, buy jewelry, et cetera. We're starting to see it.
Yeah, it's a very U.S. thing. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine, Tom. It's likely to be a combative hearing when Attorney General William Barr testifies today before the Democratic-controlled House Judiciary Committee. In a prepared statement, Barr says the president has not tried to interfere in Justice Department business. He'll also argue that the president was the victim of wrongdoing by the Obama administration and by anti-Trump forces in the FBI. Senate Majority Leader Mitch McConnell has to do more than battle Democrats over his new coronavirus relief proposal. A number of fellow Republicans also are opposed to the $1 trillion measure. It calls for reducing those enhanced unemployment benefits and sending $1,200 checks to most Americans. House Speaker Nancy Pelosi calls the Republican plan pathetic. Still, she says she'll try to find common ground. And it's an unusual restriction for a presidential campaign. Joe Biden's staff has been forbidden from trading individual stocks without approval from the campaign's general counsel. That's according to an email obtained by Bloomberg News. The policy is designed to prevent trading on non-public information. New York State health officials will investigate a Hamptons charity concert that was opened by Goldman Sachs CEO David Solomon. Solomon performed as a DJ. Governor Andrew Cuomo says he was appalled by what he called egregious social distancing violations seen in videos of the event. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom?
Ritika, thanks so much. Greatly appreciate it. Coming up on the pandemic, maybe she'll have something to say about that event out on Long Island. The Lieutenant Governor of the Empire State, Kathy Hochul, will join us in the 7 o'clock hour. She's been really, really wonderful through this entire pandemic about the pulse in the fabric of upstate New York. Stay with us. This is Bloomberg.
to be a tourist. It's not exactly what we would have wanted, but we're trying to, as much as we can, take precautions in order to make sure that we stay safe and that we're not, endangering anybody here. We want to make sure that we got COVID tests before we left the state of Florida. I'm honestly happy to be out of the state of Florida because I feel like Florida is just starting to spike and it's becoming this epicenter, which is definitely somewhere where I don't want to be. So I'm happy that we got the test, we cleared negative, and then we were just out of there.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
This This is Bloomberg Surveillance. Tom Francine from London and New York. Now, the COVID-19 shock is underscoring the role that private markets can play in investor portfolios. That's according to Jim Barry, Chief Investment Officer of BlackRock Alternative Investors. Well, amongst the key investment themes Jim sees emerging amid the ongoing uncertainty are the size of the policy response so far, the changes to the economy, and sustainability. Well, Jim Barry joins us now. We're delighted to say. Jim, thank you so much for joining us. Now, we're doing a little bit of analysis with some of our colleagues who also follow what you do very closely. I mean, have you struggled with any fundraising, for alternative things? What's the appetite for them right now?
So, look, I mean, I would say generally alternatives and private markets in particular have been, accumulating capital at a phenomenal rate over the last 5 years. And really, while there's obviously some logistical difficulties with respect to the last few months, there's nothing from our clients suggesting that sort of allocation is going to diminish in any way. And in particular, the low yield environment has been a big driver, and clearly we're looking at that being sustained into the medium and potentially long term. So no end to the accumulation of capital.
So, Jim, how has the pandemic actually, changed investors? Or the market? Are you seeing bargains in the market right now?
So, look, I mean, as investors, we were kind of all waiting for a turn. I would have said to you last year, if we spoke, that we were seeing very much late-stage market dynamics in terms of pricing terms on deals. Now, no one expected the pandemic and the scale of crisis we've had. But in a sense, there was almost an expectation and a wanting some sort of shift, because typically post-crisis, they've been great vintages for private markets. But I would just say very briefly, I don't see this like being equivalent to the GFC for a number of reasons. One is the scale of monetary and fiscal response, and that tsunami of liquidity has kind of modified the scale of some of the opportunity in the short term. I would say, secondly, because of the scale of capital that's available, and I would say to you, investors being less gun shy than they were in 9 and 10, I think there's just more competition for assets. And then finally, I don't think, and I fundamentally believe this will not be a rising tide lifts all boats, as I felt really post-GFC it was. I think we're seeing massive structural shifts in our economy that will be permanent beyond the crisis, with more dispersion of outcome.
I mean, Jim Barry, back to your days at Bain, I'm going to say you're one of 10 guys in the world on infrastructure. Give me the update on renewable energy and infrastructure and the future of big oil, whether state or private owned, and fossil fuels. I mean, you guys are almost the anti-Exxon. Where's Exxon going to be in 10 years?
Look, the reality is the science says we have to fundamentally transform our energy complex and decarbonize it. And that's great for renewables, but also for a whole range of other technologies and solutions. But at the same time, that doesn't happen overnight, and it's going to happen over the next 2 and 3 decades. But certainly the big challenge for the oil majors, apart from how do they pivot their model to a decarbonized world, is attracting investment. Because it's okay for me to write a check today as I look out 10 years, but how do I sell that investment in 10 years if I don't have another 20 years of cash flow I have confidence in? Right. And this is why the impact on capital is going to be much more immediate and dramatic.
What are you seeing as internal rates of return of broader infrastructure projects, because BlackRock is so cash flow driven? I mean, are you talking a single digit world, or are you talking more like private equity returns?
So no. So I would say to you, infrastructure done properly does not have the same risk as private equity and shouldn't attract the same return. Yeah. And so we've seen returns move in on a levered equity basis into the mid-high single digits for your classic developed market, highly contracted infrastructure asset. Now, we may see a little improvement in that through this crisis, but frankly, we've still been selling assets at pre-COVID prices over the last few months, high quality assets. And so I would say to you is that it's not going to see, and I would say generally, we're not going to see this dramatic jump in returns, but I think we will see more flow. I think some of the pressure, the liquidity pressure, will drive flow of assets, but you won't, I would say to you, expect this dramatic boom in the returns.
Jim, how difficult is it to do due diligence, given you're not traveling and you're not on the ground as much?
It's very funny. I did put my hand up the other day to take a bus to Taipei to do some due diligence if it was needed. I did travel that much, but the more seriously, it is a challenge. Now, I mean, we're clearly using technology, sort of video tours of sites, particularly when it comes to real assets, drones. One of the bigger challenges is management teams. If you're in private equity or private credit, you need to look people in the eye on this stuff. So it's definitely put a crimp in the style. Much more leaning on existing relationships, which kind of mitigates some of those issues. But I would say to you, rather than stopping deals, it's just kind of slowing down the pace of conclusion.
Is there too much money chasing too few projects? You know, I look at Carlyle. I told them they got to fix Terminal 1 at JFK as fast as they can. It's an international disgrace. But to you guys building things, is there just too much money chasing too few ideas?
So look, I think it's a challenge generally in private markets. We have something like $2.5 trillion of dry powder against a market size of around $8 trillion. Yeah. So there's a lot of capital. So there's a huge premium on origination, Tom. And so, you know, that's something we're very focused on. I have a capital markets team reporting to me that's out there every day, shaking the trees with the street and sponsors. But certainly, I think, look, it really emphasized the need for discipline in your underwriting. And also patience now, because I'm telling you, we may see assets today that look great from a price perspective as against 6 months ago, but fundamentally the world has changed in a way that price right for the risk that asset now faces. I think that's the bigger challenge.
We got to have a conversation on this again. Jim Barry, thank you so much from Ireland today. Greatly appreciated. BlackRock Alternatives Investor CIO as well. Coming up, this is a really timely conversation. David Weston with Mr. Summers. There's a little bit to talk about, including the efficacy of stimulus. Somehow I think that will come up with a former Secretary of the Treasury. Look for that in the 12 o'clock hour. This is Bloomberg. Good morning. Futures. Red, green, green, red, red, green, 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 red, 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 green. It's that kind of market.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
This morning, they, quote, clearly do not have shared values. The distance between Republicans and Democrats, it's far greater than a $2 trillion divide. Speaking of distance, it's 394 feet to walk from the Trump International Hotel to the FBI headquarters. That's in the bill somewhere. Talks begin this morning on the Democrats', quote, multi-trillion-dollar socialist manifesto. Markets, well, it's a summer doldrums gold, 1944 the ounce. And, well, the pandemic, it continues state to state. It continues in the dugout of the Florida Marlins. Good morning, everyone. This is Bloomberg Surveillance from New York, from London as well. Francine Lacroix with us as well. Francine, I have such respect for Premier League English football. You know, I bust Pharaoh's chops about it all the time. But, boy, you guys did that so much better than the struggle in sports in America. It's just remarkable.
You mean in terms of going ahead with the games, but actually not allowing
doing
fans?
It right, yeah. You know, I'm sure there were flaws, but just the British nailed it compared to what we're going through here.
Yeah, I mean, that you know, you would say that that's for a couple of reasons, is that actually the UK also was quite cautious once they started going into lockdown about closing down big events. Now, I don't know whether that's sooner or later than the US. That probably it depends state by state. Certainly Premier League here in the UK and really across the world is such a huge symbol that you want to get that right, because otherwise it impacts, you know, I guess the holding of the UK, what we call soft power across the world. So you want to make sure that people don't catch anything whilst looking at games.
I only brought this up, Francine, because it's Harry Kane's birthday. He plays with the Tots, you know, as well.
Right.
We'll do that.
The
stimulus front and center. We're going to get to Kevin Cirilli here with some really good perspective. First, your first word news in New York City. Here's Ritika Gupta.
Good morning, Tom, Francine. The battle is on over what the next coronavirus stimulus relief bill will look like. Senate Majority Leader Mitch McConnell unveiled the Republican proposal. House Speaker Nancy Pelosi called it pathetic, but says she'll try to find some common ground. The plan would reduce extra unemployment benefits and send $1,200 payments to most Americans. The coronavirus is reaching a plateau in some of the hardest hit U.S. states. That's after health officials imposed unpopular measures like closing bars and requiring masks. Florida reported its fewest new cases in almost 3 weeks. Texas had its lowest total in 2 weeks. Now states wonder whether they can keep infection rates down until a vaccine arrives. And China is buying American imports, but not enough to hit the terms of the two nations trade deal. That's according to Bloomberg calculations based on Chinese customs agency data. In the first half of the year, China had bought about 23% of the total purchase target. For 2020, purchases of farm products have stepped up the last 2 months. And the European Central Bank has asked that banks hold off on dividends or share buybacks, at least until January. That's a blow to lenders who wanted to return to business as usual. The ECB also asked banks to show moderation when it comes to hand out bonuses. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Let's look at equities, bonds, currencies, commodities. A really quiet market right now. A little bit of note there, but nothing like what we saw yesterday. Futures now sort of low red for the day, -9 Dow futures at -82. Yields back up yesterday. They're sort of back to where they were, 10-year yield 0.61%. I would note Turkish lira has been weaker and substantially weaker over the last 2 hours, out to 6.94 right now on the Turkish lira. I'm struggling here, Francine. There's not much going on.
No, there's not much going on, which is actually why I'm looking at a stock price. I'm looking at LVMH dropping after
like you did that.
The French luxury group missed analyst expectations. That's significant because actually there's not that much around. I mean, a couple of other, I guess, notable companies here. You know, Peugeot is up after it stuck to its outlook. Silver retreated along with gold, and the dollar trading near a 22-month low, Tom.
Well, very good. Right now, we want to get some of the color, some of the comment as we go into huge negotiations today in Washington. Let's listen.
Senate Republicans have presented us with a half-hearted, half-baked legislative proposal. In short, the Republican plan is too little, too late. The Republican plan is weak tea when our problems need a much stronger brew.
The divide is substantial. The senior senator from New York State. Right now, the senior chief Washington correspondent, Kevin Cirilli, joins us. Kevin, what is the urgency among all parties here to the people of America? Do they understand the calendar, the end of July, the rent due August 1st, and the checks start to run out? Do they really understand that?
Yes, they do. I think that's in part why Leader McConnell crafted this sense of urgency with the deadline running up against the clock of Friday. Quite honestly, I think based upon the conversations that I had yesterday with some staffers as well as members, they might even have to go beyond Friday when the unemployment for millions of Americans is set to expire. Yesterday, Leader McConnell on the floor used this analogy in terms of how he discussed the proposal that the Republicans put out. He said, America is now in the physical therapy, his words, sense of the recovery, no longer in the hospital. And so because of that, you're seeing Republicans push for there to be an incentive to get Americans back to work. In contrast, you heard from Leader McConnell, you heard from Speaker Pelosi, who called it pathetic. Yesterday, I spoke with Congressman Max Rose, a Democrat from New York. He said he was, I don't even want to repeat what he said on air, but he was not, he said it was dead on arrival. That's the part I can tell you.
Okay, but then, okay, fine. It's dead on arrival. We've got Republicans watching. We got Democrats watching. I get that. What do? Walk in a room and split the difference on every item?
Well, I think from a transpartisan position, I think when you look at this in terms of what Senator Mitt Romney as well as other Democrats have worked together on in terms of trying to micro-target small businesses to get them access to capital, and also over the longer term to provide economic relief, I think that there are some areas tucked into this Republican bill that will garner Democratic support. There's $100 billion with a B, $100 billion in the Republican bill that would be allocated for schools and education. And so I think that there's also agreement surrounding giving small and medium-sized businesses access to capital that would allow them to protect themselves and their employees and their facilities between now and whenever we get a vaccine.
Kevin, how quickly can they actually get this done?
You know, that's the I guess the $1 trillion question, Francine, here in Washington, D.C. I think, you know, in covering these types of mammoth battles on Capitol Hill, you've got the opening bid, which we saw yesterday. You've got the cliff, so to speak, which is Friday. I think they will likely, if they don't get it done by Friday, it will be shortly thereafter. There's meetings around the clock, virtual in the halls of Congress, socially distant, to get this across the finish line. I don't see a situation where this doesn't get done within the next 2 weeks.
What happens in the next 2 weeks, though, Kevin? I mean, you know, Tom keeps on reminding me that people have rent to pay and things like that. Is there a moratorium for 2 weeks? Is everything suspended?
No, I don't think that you're going to see that. And I think that's what's so alarming, to be honest, for so many people who are impacted by this. But it's got to get out of the Senate. Then it's got to go to the House, and then it has to be reconciled, and then the president will sign it. And I would anticipate yesterday, again, the first step in that process with the opening bid was completed. And I just have to say this because I think it bears repeating, Francine. There are millions of Americans in this country who are without homes and who also are without are not registered in various systems that have not gotten any financial assistance since this entire crisis began.
Well, okay, Kevin, we brought this up yesterday. I'm glad you bring it up. I thought the Washington Post did a great job of subbing out all the minutia. I get that they're going to cut the employment check, but it's hinged on the states getting out 70% of whatever. You told me yesterday that's undoable. Why are the Republicans proposing that if every expert we've talked to has said it's undoable?
Well, I think from the perspective of conservatives, they would say that there's got to be a give and take, especially as the data goes down. There has to be an incentive to get employees back to work. They don't want to have a situation where people are making more money by staying home when they can be healthy and safe and go back to the office. I think what's kind of thrown a loop in all of this is a wrench in all of this, rather, is that the data in certain states suggests that many states have not gotten over or have had a spike in cases. And so there's competing narratives right now about the data flow, and that's led to a lot of not just economic anxiety, but health anxiety from the perspective of employees of all different backgrounds, all different pre-existing medical condition, all different ages, socioeconomic issues, family issues, about whether or not they can safely go to work. And I think the psychology of the American worker right now, it should be the focus of former Vice President Joe Biden and President Trump on the campaign trail.
Oh,
and
come
I'm not sure that either campaign is really speaking to that psychology
Kevin,
of the worker.
You're upsetting me. The focus of the president is the 394 feet from the Trump Hotel to the FBI headquarters. We all agree we need a new FBI headquarters. There's no one that disagrees with that. The thing is a monstrosity. He's focused on 394 feet. Shelby of Alabama reamed him last night.
Precisely. And I think, listen, I'm not disagreeing with you. I'm saying that from a granular level, it's broader than Washington. And I think when you have Republicans like Lindsey Graham, when you've got Republicans like Mitt Romney now increasingly looking at this and saying, what precedent is this setting for economic policy in the longer term? And in the short term, what message are we sending to the American worker who's grappling with getting back to work? Many workers who aren't going into office buildings but are going out on job sites. I think that in particular, Tom, is where both campaigns ought to be directing their messaging to.
It's going to be fascinating, folks. I mean, it's going to be really an eventful